Let's bring in Quincy Krosby. She is the Chief Market Strategist at Prudential Financial. Quincy, thank you so much for being with us. So let's just talk stocks for a second here. We had, right out of the gate, Dow was up 670 points at 9:30 this morning. And then it sort of did this sort of strange W thing where it fell and then rose again and then fell again. Just walk us through what happened here.
Well, overnight, the futures market was obviously more and more positive as we got to the open. And then, you know, the market, I think, is looking at this and sees the rise in hospitalizations. And that's what they look at. We know the cases go up, but what we want to see and what really bothers the market is the hospitalizations rising. But overall, I think if we can close in the green at all today, I think that's very positive. Because the damage in the market, the pullback was fairly dramatic. We haven't seen those kinds of pullbacks in a long time. I mean, in fact, since 1993, for the S&P 500, there maybe been 20 times that we had 5% or more. But that said, the market was ripe for a pullback. The market was overwhelmingly overbought. You know, we had some parts of that silly season with, buying bankrupt companies, betting on them. But overall, we'll see how we can close. If we can close in the green, I think that is a positive. Although you have to believe that there are still sellers waiting in the wings for another chance to sell. The damage that we had obviously has produced, more who want to get out. And I think many are waiting for that moment. So I don't think this is over. That pullback, the volatility index moving above 40, deep above 40, tells us that the market is primed for more of a pullback. The other aspect to this, just going into this downturn, you know that many of the indexes regarding financial stability, financial woes, there weren't any. The market was sanguine. And that also set us up for a big pullback. We're going to have a host of data next week, which will be very important for the market. The market has risen on the back of less bad news, but I think what the market needs, even at these levels, is to have a dose of plain old good news.
So just in terms of what plain old good news would look like now, you mentioned there's obviously fears about a second wave and also in terms of hospitalizations as well. What sort of government response at this point is the market looking for just to feel like things are under control at this point?
Well, we've heard from a number of the states that at least the localities, not necessarily at the state level, are planning on restricting the opening, just pausing for a bit to see what's happening. We're hearing this out of Nashville. We're hearing it out of Houston. So that would be something that might comfort individuals. In the U.S., 70% of the U.S. economy comes from consumer spending. So the economy can be up, but if Americans do not feel safe enough to engage in the typical activity, social activity, economic activity, it is going to put a dampening effect on the overall economy. So I think that whatever the government does or doesn't do, I think U.S. citizens overwhelmingly, by the way, and every survey tells us that they are cautious about going out again until they feel safe. So I don't know what the overall government, in D.C., the administration can do. They've already told us that the economy is not going to shut down. But U.S. consumers may do just that.
So just given overall the sharp rally in stocks that we've seen over the past month or so, I mean, after that dramatic drop yesterday, do you think that stocks at this point are going to tread a bit more carefully, especially given the news out of a number of states in the South with the rise in cases and hospitalizations and that kind of thing? Is it going to be a very different scenario with the markets going forward until there's a full reopening?
Well, at least initially, but I don't think so. I think, once you get the momentum back in the market, for example, we start to see Europe, opening up, and it already has started to open up without any problems. We start to see China beginning to turn the corner in terms of growth. The U.S. economy is affected by that, but certainly the market is affected by that. And we may start to see a bit of risk taking again. You know, one thing that we say from when we trading floor is buying begets buying and selling begets selling. So once the buying begins again, which it will create its own momentum. But I do think, at least initially, we're going to see a bit of caution in the market. It's not going to go completely risk on until we get another catalyst. And that could come from the headlines regarding a vaccine, headlines regarding a therapy, or that we begin to see the virus contained, going into remission for a bit of over the next couple of weeks.
Yeah, as you mentioned, the market really needs genuine good news at this point. Quincy Krosby, live from there. Thank you so much. Appreciate it. Have a great weekend.